story ended after the triple-digit highs of 2024. Headlines focusing on accounting scandals and internal control weaknesses have shaped a pervasive narrative that SMCI is a broken growth company destined to linger in the shadow of its competitors. Yet the reality diverges sharply from this perception. On January 27, 2026, the company officially regained NASDAQ compliance, signaling that its regulatory issues are being actively resolved. In parallel, its Taiwan subsidiary secured a $710 million credit facility, providing the financial backing to pursue a $36 billion revenue target for the current fiscal year, a goal that underscores the scale of the company's ambitions. Guys, 99% of people watching don't like or subscribe to the videos, so please take a second to hit that like button and subscribe. It really helps the channel grow. For investors tracking AI adoption, NVIDIA and Apple often represent the architects of innovation. Supermicro, by contrast, represents the builders, the firms responsible for the infrastructure that enables AI to function at scale. Currently, SMCI holds over $13 billion in Blackwell Ultra orders, illustrating a robust pipeline of committed demand. The apparent tension in the company's stock price reflects a classic expectation versus reality dynamic. Market commentary frequently emphasizes that competitors such as Dell and HPE are encroaching on SMCI's market share by leveraging larger sales forces and aggressive pricing strategies. However, the company continues to dominate the liquid cooling segment, maintaining a 70 to 80% market share. This technology is increasingly critical as high-density AI data centers adopt liquid cooling as the industry standard. Profit margins have declined to roughly 9.5%, a notable drop from historical levels of 14 to 17%. While on the surface this may appear concerning, the reduction reflects an intentional strategy. Supermicro is prioritizing market share and large-scale deployment over short-term profitability, executing a classic land grab. Trading platforms such as SoFi, Invest, and Interactive Brokers indicate that SMCI trades at a forward PE ratio of approximately 13x, a valuation that is historically low for a company projecting 60% revenue growth this year. For sophisticated investors, the question is clear. Can a company with extensive physical infrastructure, $13 billion in active orders, and a $2 billion credit line from JP Morgan remain at a $30 valuation once regulatory uncertainties are resolved? The lingering concern among retail and self-directed investors revolves around accounting weaknesses, with many assuming that the 2024 scandals will permanently impair institutional confidence. However, recent developments suggest otherwise. BDO has been appointed as the company's new auditor, and a comprehensive compliance plan is now in place. In addition, SMCI amended its credit agreements this week to align fiscal representation with a June 30th year-end, demonstrating proactive coordination with its lenders. These actions indicate a company addressing its past issues and preparing for accelerated growth, rather than hiding from regulatory or financial scrutiny. Supermicro's business model further differentiates it from competitors. The firm's data center building block solutions enable extensive customization, contrasting sharply with the standardized, off-the-shelf servers offered by Dell, HPE, and others. This modular approach allowed the company to pivot to liquid-cooled racks more quickly than any competitor, establishing a technical advantage in high-density AI deployments. The technical moat extends beyond GPU installation. Effective thermal management is critical for operating thousands of GPUs simultaneously during intensive AI training runs. As AI models continue to expand in size and complexity, the physical constraints of heat dissipation favor companies with extensive liquid cooling experience, placing SMCI in a structurally advantaged position. Institutional activity also underscores measured confidence in the company. Earlier today, Impact Partnership Wealth LLC acquired over 17,000 shares. While modest relative to the firm's multi-billion-dollar scale, this purchase reflects a broader pattern of selective accumulation by professional investors. The stock's 52-week range of $25.71 to $66.44 highlights the magnitude of the sell-off over the past year. Yet the current 30.6 price point sits on a level of support established throughout January. For investors using Fidelity or other brokerage platforms, SMCI offers high beta exposure to the broader build-out of digital infrastructure, a market trend that is likely to accelerate as AI adoption expands globally. Looking ahead, the company faces a binary outcome. If the DOJ investigation concludes with a manageable fine or resolution, The reality of $36 billion in projected revenue could trigger a substantial re-rating, pushing the stock toward the average analyst target of 46. Conversely, if competitive pressures from Dell and HPE continue to compress margins below 9%, SMCI risks being relegated to a low-margin commodity hardware provider. Even in this scenario, however, the $13 billion Blackwell order backlog and a $2 billion credit facility indicate that the company is planning for growth, not contraction. These orders reflect tangible demand from enterprise clients who require high-density, liquid-cooled data center solutions. The company's operational strategy reinforces this view. By focusing on long-term infrastructure contracts and securing large-scale deployments, Supermicro is deliberately trading short-term margin for long-term market positioning. This approach is consistent with historical land grab strategies seen in technology infrastructure markets, where control over physical deployment often translates into sustained revenue streams and competitive advantage. In practical terms, SMCI is locking in its position in the AI infrastructure supply chain at a time when high-density GPU deployments are becoming mission-critical for enterprise clients. In summary, SMCI at 30.6 represents a high-risk, high-reward inflection point. While daily trading may appear flat, the underlying developments, including regulatory compliance, expanded credit facilities, and dominant liquid cooling solutions, are reshaping the investment thesis. The gap between fear rooted in historical accounting issues and the engineering reality of AI infrastructure presents a clear strategic opportunity. The next several weeks, particularly Q2 fiscal 2026 delivery updates, will be critical in determining whether this recovery is sustainable. Supermicro's technical authority in liquid cooling is beyond question. The remaining variable is the robustness of its financial controls. For investors and institutional observers alike, the convergence of regained compliance, large-scale credit access, and an unparalleled order backlog makes SMCI a company that warrants close attention. The coming quarters will ultimately reveal whether the market narrative adjusts to reflect operational reality or whether the stock continues to trade at a discount relative to its intrinsic positioning in the AI-driven